Joint ventures. Practical problem on joint ventures where joint bank account is maintained by the parties. Dear students, today let us learn about how to pass journal entries and ledger accounts where a joint bank account is maintained by the parties to joint venture. Illustration. J. Jones, A. Armstrong and B. Block entered into a joint venture to divide profits equally. They bought goods from C. Smart and Company for Rs 12,500 and from J. Jones for Rs 2,500. Jones contributed Rs 3,000, Armstrong Rs 4,000 and Black Rs 9,000, which amounts were banked in a joint account. They settled their account with Smart and Company by check and paid for carriage and other expenses Rs 750. They sold goods for cash 6,500 rupees and to Smith and Sons on credit for Rs 14,000, who accepted a draft for the amount. The acceptance was cashed and realized Rs 13,700. J. Jones was allowed 5% commission on sales for effecting the transaction. Pass journal entries and open the necessary accounts, assuming that final settlement between the parties was made by checks. Solution. Let us record journal entries each transaction wise. They bought goods from C. Smart and Company for Rs 12,500 and from J. Jones for Rs 2,500. Journal entry for this transaction is joint venture account debtor 15,000 to C. Smart and Company 12,500 to J. Jones capital account 2,500, being the cost of credit purchase of the goods under J. Jones capital account. Next transaction. Jones contributed Rs 3,000, Armstrong Rs 4,000 and Black Rs 9,000, which amounts were banked in a joint account. Journal entry for this transaction is joint bank account debtor 16,000 to J. Jones capital account 3,000 to A. Armstrong capital account 4,000 to B. Block's capital account 9,000, being the amount of capital contributed by the parties. Next transaction. They bought goods from C. Smart and Company for Rs 12,500. Joint venture account debtor 12,500 to C. Smart and Company 12,500, being the purchase of goods from C. Smart and Company. They settled their account with C. Smart and Company by check. C. Smart and Company account debtor to joint bank account 12,500, being the payment to C. Smart and Company on account. Next transaction. Paid for carriage and other expenses 750. Joint venture account debtor 750 to joint bank account 750 rupees, being the payment of carriage and other expenses. They sold goods for cash Rs 6,500 and to Smith and Son on credit for Rs 14,000, who accepted a draft for the amount. Joint bank account debtor 6,500 towards cash sales, Smith and Son 14,000 to joint venture account 20,500, being the amount of cash and credit sale proceeds. Bills receivable account debtor 14,000 to Smith and Son 14,000, being the acceptance of our bill by Smith and Son. Next transaction. The acceptance was cashed and realized 13,700. Joint bank account debtor 13,700, discount account debtor 300 to bills receivable account 14,000, being the bills receivable was discounted through bank. Joint venture account debtor 300 to discount account 300, being the discount expense transferred to joint venture account. Next transaction. J. Jones was allowed 5% commission on sales for effecting the transactions. Joint venture account debtor 1025 to J. Jones capital account 1025, being the 5% commission on sales payable to J. Jones. This commission is calculated on the total sale proceeds, cash, both cash and credit. Now we will prepare joint venture account to find out the profit on joint venture. All the expenses are recorded on the debit side and on the sale proceeds on the credit side. On the debit side, to C. Smart and Company cost of goods 12,500, to J. Jones cost of goods 2,500, to joint bank carriage expenses paid 750 rupees, to discount 300 rupees, to J. Jones capital account 1025. On the credit side, by joint bank account sales, cash sales proceeds 6,500, by Smith and Son credit sale proceeds 14,000, total 20,500, and the resultant profit on the joint venture is 3,425, shared equally by the parties. J. Jones 1/3, A. Armstrong 1/3, B. Black 1/3 share rupees 1,141.67 equally. Now we need to pass a journal entry for transferring gross profit to capital accounts. Joint venture account debtor 3,425 to J. Jones capital account, to Armstrong capital account, to B. Black's capital account 1,141.67 each, being the transfer of profits on joint venture to parties who shared profits equally. Next we will prepare 3 capital accounts to find out how much each partner will get as a final settlement on this joint venture. Now J. Jones capital account. By joint bank account, capital brought by J. Jones 3,000. By joint venture, goods 2,500. By joint venture, commission 1,025. By joint venture, 1/3 share of profits 1,141. Total 7,666.67. J. Jones to joint bank account 7,666.67. Next, Armstrong capital account. By joint bank account, capital brought by him 4,000 rupees. By joint venture account, 1/3 share of his profits 1,141.67. Total 5,141.67 is due to Armstrong. So we have to record on the debit side to joint bank account 5,141.67. Next, B. Black's capital account. By joint bank account, capital brought by B. Black 9,000 rupees. By joint venture account, 1/3 share of profits 1,141.67. Total 10,141.66. B. Black's to joint bank account 10,141.66. So J. Jones finally will get 7,666.67. A. Armstrong will get 5,141.67. B. Black will get 10,141.67. Next, we have to place a journal entry for transferring the final settlement through joint bank account to the parties. J. Jones capital account debtor 7,666.67. A. Armstrong capital account 5,141.67. B. Black's capital account 10,141.66. To joint bank account total 22,950 rupees, being the withdrawal of partners amounts standing to their credit and their respective capital accounts for final settlement between the parties was made by checks. Now let us prepare joint bank account to find out whether the final settlement is made properly. On the debit side, all the receipts into the bank are recorded, and then on the credit side, all the expenses and payments are recorded. Debit side, to J. Jones capital account 3,000, to Armstrong capital account 4,000, B. Black's capital account 9,000, total 16,000. The capital brought into the business by the partners deposited in the joint bank account. Joint venture account cash sales 6,500, to bills receivable account 13,700. On the credit side, by C. Smart 12,500, by joint venture account expenses 750, by J. Jones capital account 7,666.67, by A. Armstrong capital account 5,141.67, by B. Black's capital account 10,141.66. Total 36,200 on the debit side. On the credit side, total 36,200. So the settlement is made properly and the books were recorded effectively. In the next lecture, we will discuss about average due date.